Dollar Yen Daily Forecast, April 27th, FXEmpire.com. The dollar yen pair is without a doubt one of the more interesting pairs at the moment. In this market, you have a matchup of two central banks that seem dead set on killing off their currencies. After all, the Bank of Japan is in a hyper easing mode, and the Federal Reserve seems to think that by managing an orderly decline in the value of the dollar, they are fulfilling one of their unspoken mandates. The Friday session will be an important inflection point in this pair as the BOJ is expected to announce some form of easing. The higher yen value is absolutely decimating the exporters' profits in that country, which is by far the most important part of the Japanese economy. As such, the Bank of Japan is desperate to devalue the currency if at all possible. The meeting is expected to produce an expansion of the bond buyback program that the central bank has cranked up recently. Simply put, this allows the central bank to buy Japanese government bonds, or JGBs as they are sometimes referred to replace the lackluster demand by the Japanese public. The public has long been buyers of bonds as they prepared for retirement, but much like the United States, the Japanese have a massive baby boom after World War II, and as a result, the largest group of people in the country is now facing retirement. They will not be buying these bonds. The BOJ is buying the bonds simply because they have to. Also, this has the added benefit of essentially creating yen out of thin air, so of course it will have an effect on the value of them as the supply and demand curve gets completely out of whack. Estimates are for Central Bank of Japan to announce an expansion of 5 trillion yen in this program. Needless to say, anything larger than that would be detrimental to the value of the yen as it couldn't have been priced into the market. From the technical side, the recent action has seen a downtrending channel being respected, and here recently we have pierced through it once, possibly twice depending on exactly how you draw it, but nonetheless you can see that the Thursday session was a doji. Wednesday session was a doji. The Thursday session actually fell fairly significantly, but as you can see, we recaptured about half of the losses. As we wait for the Friday announcement out of the BOJ, it does look like the bulls are starting to step in and buy every time this pair falls. The 200-day moving average is just below, as is the 80 handle and the 50% Fibonacci retrace. It shouldn't be shrugged off either that the most current support we're finding is at the 38.2 Fibonacci retrace. Simply put, this pair is almost impossible to sell at this point. Whether or not it's a buy, that could be a different conversation. But our strategy is to buy this pair, again, add to the position, we should say, on a breakout of this downtrend channel for more than a couple hours. However, we do get the pullback. The 80 level without a doubt has to be one of the most supportive levels on any forex chart we pay attention to right now. We think that if we do fall, that will be where the scales get tipped back in the favor of the bulls. The last time we saw this type of action in the dollar yen was back in 95 when it changed trends back then as well. And as long as we can stay above the 80 area, we still believe that the trend is changing.